This is the Friday, September 25th, 2015 version of the Market Plus segment. Joining us now is Ted Seifert. Ted, welcome back.
Hey, thanks for having me, Mike.
Topic we didn't get a chance to discuss on the show was the cotton market. Down a little bit. Where do you see this cotton market headed? Excuse me, up.
Yes, 9 cents
on the
a
week.
hundredweight, I think. Yeah, slightly higher, so maybe we're starting to stabilize right now. But, the charts don't look great at the moment. Fundamentally speaking, it's hard to get excited about cotton. I think unless we can get China interested as being a bigger importer once again, we're going to have a tough time with cotton market unless we cut out a fair amount of acres. Something's got to give. These lower prices are telling us something. We either need more demand coming from somewhere, or we need to start cutting down on production.
Any chatter from the Chinese market on cotton while they were here this week?
I haven't heard a thing on it, and I guess they could have a drought issue at some point, but until something like that happens, I don't see the Chinese demand increasing anytime in the relatively near future. So I have concerns for cotton. I don't really see a good reason to turn around. We had a little bit of a stabilization week this week, and it's good to see. But in a downward trending market, we need to do that every once in a while. I'm just not aware of any really very strongly bullish fundamentals out there to turn the cotton market around unless we start seeing planting intentions cutting out a fair amount of cotton acres.
Okay, all right, so just not a lot of upside in that market.
Not that I see.
Okay. Well, now, we talked on the program a little bit about the equity market. Saw it was almost like cattle market this week, up and down and up and down.
Yeah.
We've got a question here from John in Dysart, Iowa. John is wondering, is the falling stock market going to influence the commodity market? And if so, how?
Yes, so the stock market does influence the commodity market, but not necessarily in the sense that when the market rallies, then commodities have to rally. It's a money flow thing, more often than not. While it is a good indication when stocks are going higher, that commodities could go higher as well. There's an inflationary idea there. The real idea is that when you have stocks going higher, these big money flow guys have more margin to work with, and they feel less concerned about risky commodities. So when there's rally in the stock market, we have what's called a risk-on trade. So we'll go in and we'll see these money flow guys, the bigger speculators, the bigger funds coming in and buying commodities as a whole, looking for that rising tide across the board. On the other hand, and I think the question is more about falling stock market, that is certainly a concern because when that happens, you get the risk-off trade. And your bigger fund managers can come under pressure with margin and having to worry more about their stock account. So they're getting out of other commodities in order to kind of put Band-Aids and fill the holes there.
Sure.
But the other concern is that when things like that happen, they get nervous and they want to shed risk or get away from risk. And commodities is generally the first place they go to do that.
So as we look today, and I'm sure you look at the CFTC Commitment of Traders reports, where do you see that non-commercial, that managed money today relative to last year or 2 years before in the commodity markets?
Well, we've been down a little bit, but I think that they're starting to get a little bit more interested. Corn in particular, you see, I think a little bit of a struggle on the board right now between that big fund interest that you have in corn versus producers selling that we're getting off a harvest right now. But I think overall, they're interested in corn longer term. I think soybeans and wheat might start to generate some of that as well if corn can kind of lead the way. But you look at other commodities, crude oil, that they've, for the most part, wanted to be short or flat, to say, at best. Haven't been aggressively getting long there. I'm not sure I see that anytime soon. With this strength that we saw in soybeans today, grains today, stock market today. Crude started out well, but really backed off towards the end of the day. And yes, it was a higher day, but really wasn't anywhere near as good as it could have been. We're kind of in a little bit of a consolidation area for crude. We've bounced off the lows. Now we're in what's called a triangulation formation. So sometime relatively soon, we should break out one way or the other. I get the feeling that if we're going to break out to the upside, we should have been closing up near highs today. We did somewhat break out to the downside on that the other day, but we were saved by that turnaround in the stock market and big turnaround, off the lows in grains too. It was a rising tide in commodities as a whole, stock market as well. That was a money flow thing, and you saw a lot of money coming into investments in commodities and equities as well. But I don't know if that saves us longer term.
Okay.
I don't always agree with the Wall Street guys about their assessments of commodities, but I do kind of see good reason for crude to maybe come back down. I don't know about that $20 handle, $20 mark that has been thrown around out there. But I do think a challenge at the lows might be in the cards.
Sure. $20 might have been thrown out by guys who were short.
Yeah, agreed.
Yeah. Now, I want to talk to you about Phil in Ontario had a great question here. He's wondering, in your conversations with folks, and you talk to a lot of farmers, are actual combine yields higher than USDA numbers? And then he's wondering, will their October 9th numbers give us market lows?
So you have you have a tale of two crops right now. And the general consensus of what I've been hearing is for corn, it's either as expected or maybe a little bit less than expected. Now keep in mind, this is a year where we're harvesting the worst stuff first because we dried down quicker with that heat that we had. So that could get better over time. But a little bit of disappointment in the corn yields. Beans, on the other hand, pleasantly surprised is the most common term I hear from guys when talking about getting into beans. And I've talked to a lot of, I've talked to guys, when you add it all up, a fair amount of bean acres that were quite surprised with yields. Talking to a guy earlier today in Indiana who's had he's still got another 2 fields to cut, but looking at record yields. In Indiana, now he was in part of the garden spot of Indiana, which were few and far between this year. But there's some really good soybeans. In particular, the late planted stuff that we had in Missouri and Kansas and parts of Illinois and Indiana, southern Indiana, that we were worried was going to yield like double crop bushels. With the favorable weather that we had at the end of September, or I'm sorry, the end of August into the balance of September so far, you're adding bushels there, and you're seeing some really good, surprisingly good results as we get into that.
47.1 for national yield, looking realistic?
I think it's a lot more realistic today than when we were having this conversation 3 or 4 weeks ago.
Okay.
The weather to finish off these later planted beans has been very good. I still think the USDA is a little bit high because we were, 47.8 last year, and you look at crop conditions, we're significantly lower, 8 or 9% lower than we were last year. So that would tell me that we're not the same as last year. And yeah, I mean, we did hurt some beans early, so the earlier planted stuff in Missouri is going to have problems. So
sure.
I don't know if and there's also talk that 47.8 last year might have been a little too high. We're going to see another look at that on this quarterly grain stocks report. So if that number comes down, you got to say that the 47.1 this year is likely high based on the USDA's crop conditions. But I think we're in the ballpark there.
Okay.
I don't think it's something where we're going to have to see a big reduction. I think there's a potential to see a 2 to 3 bushel reduction in corn yield, but I don't think we're going to see a big drop from where the USDA is on soybeans. And if they continue to go along with the trend, we've seen crop conditions increase. I wouldn't be terribly surprised to see a slightly higher number in October, especially if this coming Monday and maybe next Monday we see an increase in that condition again.
Now, while we're talking soybeans, before we let you go, we've got a question that ties in a lot of issues that growers are thinking about while they're riding in the combines this part of the year. Ben in Kentucky is wondering, what implications do you see aside from record farmer prices and expanded first crop bean acres from a weaker real in Brazil? Talk this currency market through with
Yes. Hi, Ben. So a couple things on the real, before we kind of get into that, a couple things on the real this week. We had a key reversal, big one, in the real yesterday. And a lot of people say, okay, now the high's in the real. Key reversals don't, although it was a big sweeping one, I mean, it is a very prominent one. Key reversals don't always mean highs or lows. A lot of times they're sort of red flags saying, hey, we could be getting close.
Okay.
But, we've had a series of reversals in the grains markets recently. And yes, we're kind of drifting higher, but we haven't been off to the races necessarily. So,
and this was a high in the real on the top end.
Well,
relatively versus the dollar.
Well, basically, Real put in a low and then reversed off that. So basically, the dollar, they're trading the dollar, and so for them, anyways, that key reversal could be saying that the Real's direction could be stalling out and maybe turning around here at this point. But here's the thing. I mean, if you look at the price of soybeans in Real terms, we're up at 2012 or above levels. I mean, we're talking very high prices in soybeans for them when they get paid in real. The problem that and that's breeding conversation of big increases in soybean acres this year. much more than what their normal increase is. I've heard upwards of 20% increase in soybean acres. That's a huge amount. The problem that I have with that, though, is that when you look at what they're getting paid in real, that's fine, but they have to turn around and buy inputs that are based in dollars. So seed. So you have very high soybean prices, but you have almost record high input
so it's
costs
2012
as well.
in America, in Brazil.
Exactly right. So I think that kind of limits these bigger numbers. I don't think you're going to see a 20% increase.
Okay.
I still think you're going to see a sizable increase in bean acres down there. 8 to 10, 11% maybe.
Okay, big increase.
Big increase. Their average is between 3 and 5%. I mean, that's what they've been doing the last few years. I think we can be a little bit bigger than that because the excitement that is down there, whenever you get high prices, breeds more acres, regardless of what it means for input costs. Again, we saw that.
Expect to see more beans out of Brazil.
Yeah,
this
but the
upcoming
20%
year.
number seems to be high.
Okay.
And the thing is, going longer term, and if we have a moment here, I see a developing trend in grains markets, and we've seen it happen with the corn and soybean spread here recently, or over the past 9 months or so. Corn has been gaining on soybeans on a fairly steady pace. And I think that is good because ultimately, if you look at this year and agree with the USDA's yield or not, we have the second highest yield, according to the USDA, that we've ever seen, yet we still have a declining carryover. That says something. That's a concern. That's got to be a red flag saying, what happens if we don't have the second best yield that we've ever seen next year or even this year for that matter?
Right.
We're going to start getting pretty darn tight on corn carryover pretty quickly. So again, that's saying we need more corn
Signal,
acres.
plant the corn acres, sacrifice the beans.
We need more corn acres.
And Brazilians might be helping us make that decision.
So so the market's going to work to try to cut out some of that bean acres and to increase corn acres. Right. That's not going to happen in South America so much. If it's going to happen, it's got to happen here. And price has got to be what's going to do it. Now, it's got to be a combination of that corn and soybean ratio, which I think needs to be 2 to 1 corn to beans.
Okay.
Maybe even slightly below that. But also, I think you have to have profitable corn to do that. So I think $4.10, something north of $4 in corn.
So you're looking 4.10, 8.20 on beans.
Yeah, the number I threw out there the other day was yeah, right. The number I threw out there the other day was 4.20 corn, 8.40 beans. I think that gets us back to a much more normal rotation. It gets us back to the 92.5 million acres that I think we need in corn.
All right.
It knocks those soybean acres down a bit.
Perfect. Great thoughts to end on. Thank you so much, Ted Seifert.
Thanks, Mike. Always a pleasure to be here.
Thanks to all of you for your questions via Facebook and Twitter. Please continue to send them in, and we'll get expert analysis right to you. Thanks for watching, and have a great week.